Welcome, folks, to another episode of the Crypto Show.
Yes.
Well, we got all kinds of information about cryptocurrency and investing. My co-host here is Nick, and he's going to set it on fire. He's going to tell us a little bit about something that I want to know more about, which is what is an IRA and what is a crypto IRA versus real money? I am confused. Yeah. I know nothing about this. Every time I do my taxes, they ask, do you have an IRA? Every time I go into a bank, they ask about IRA. I don't even know what IRA stands for. What does it mean?
IRA stands for Individual Retirement Account.
Okay.
And the simplest way to think of this is it's like a 401k.
Okay.
So a 401k is like if you have a retirement, your company is going to put some money into this hedge fund, and the hedge fund is going to put that money in the stock market so that it can grow.
Okay, so we can stop right there. Most of us understood exactly what he said, but for those of you that are in the cheap seats, we're going to slow it down a little bit. You mentioned some things that could be, we could probably deal with a little bit of elaboration. You mentioned hedge fund, and then you also mentioned something about putting it into something else. Just real briefly, you talked about the IRA going into, where does that go into?
So it goes into a special tax deferred account.
Okay.
And what that means is that anything you put into an IRA, you do not get taxed on until you take it out. It's a way to incentivize saving for retirement.
Okay.
Because we don't want to have everyone, everyone's not supposed to be just on Social Security when they get old and retire. We want someone to have some money so that they can take vacations and, do all that kind of stuff when they retire.
Okay, so if it's kind of like putting money away.
Exactly.
And saying, hey, look, if you don't touch this money, we're going to give you an incentive in the form of like a higher return.
Yes.
Okay.
Not only is it going to be a higher return by the hedge fund, it's going to be tax-free until you take it out.
Okay, boom. Now, we talked about hedge fund. A hedge fund is basically a group of what? To do what?
A hedge fund is a group of investors. And so this is why people get a little leery about this 401k stuff, because you're basically handing your money to a bunch of stock traders and you are trusting them to play the market well enough that you are going to have more money at the end than when you started with.
Okay.
And that's always going to be a good idea, because if you just left that money in the bank, inflation would eat it away over that long time frame.
Right, most likely.
Exactly.
Right.
So usually the hedge funds are a good bet. You can also do this other thing called a Roth IRA, which is you pay tax when it goes in and you have no tax when it comes out. So it's kind of like you can choose when you want to have the tax. But you're only going to get taxed once either way. It's either no tax when it goes in, tax when it comes out, that's the usual way, or you can pay the tax when it is put in and then no tax after you have later retired.
So I get that, but let's break it down even more simple. When you say pay tax on my money going in, that right there can seem shady. Many people that I know from the hood, they're going to be like, wait, you want me to pay money that I'm giving you? That right there does not sound like a good deal. So what do you mean when you're saying this Roth thing about, paying money to go in? What does that mean?
It means you don't pay capital gains tax.
Okay.
Capital gains tax is a lot higher than regular tax.
Okay.
There's a lot, so it can get into all this complicated accounting stuff.
But we're going to keep it simple. Basically, it is what it is, capital gains. That means that you made a lot of gain, and they're going to tax you at a higher rate because you made more money at one time.
Exactly.
You know what I mean? It's almost like if I was, I don't want to say an NFL quarterback. I had a couple in my mind, but I don't want that to go anywhere. And if I got a lot of money in that particular thing, I'm going to be taxed at a higher rate because I'm getting such a high amount of money. They're going to tax me at a higher rate. That's the capital gain, right?
Exactly.
Okay. Yeah. So then with the Roth IRA, that does what to this larger situation?
It could allow you to have the pain earlier, no pain when you retire. So it's take the financial pain now for gain later.
Okay.
With the regular way, it's gain at the start, take the pain when you retire.
Okay.
So it's you can flip it around either way you want with a traditional or a Roth.
Okay.
That's kind of the standard way to approach it.
Okay.
Because the last thing you want to do is leave that money in the bank. Because if you just put it in a savings account or just a piggy bank in cash and like, I'm not going to touch it, inflation is going to eat it up, and by the time you retire, you're going to have less money than you started with.
Yeah. So what he's basically saying, let's say if I put $1,000 away today, and then 20 years later, we're hoping that $1,000 still has the value of $1,000,
Nope.
but really it probably have the value of maybe $700 or less.
Exactly. Or
so
a
that's
lot
what
less.
that's what he means when he's saying that inflation's eating it away. So you want your money to work for you. That's what you want. You want your money to work for you. Now I'm going to go through a real life situation and tell me some of the you can label it. This is what that is. That's what that is. That's what that is. In the middle of the COVID situation, when things look really, really bleak, I called up my my 401 people, or whatever, and I said, "What are my options? What can I do? Can I take my money out?" And they said, "Sure, you can take your money out." And then they said, "But," and then they talked about these fees or penalties.
Don't even go there.
So they said, well, we're going to have to take you here. We're going to take 20% out here. We got to take 10% out here. We got to take, and eventually it ended up being probably close to 37% of my money. Of what?
Exactly.
37% of my money. So can you explain to me, without, you don't know all the details, but generally 37%. Just imagine you want to take your own money out, and somebody's going to charge you 37%, right? So if you know, that's
the issue with this is you wanted to take it out prior to retirement.
Yes, that's it.
This is a penalty that the government puts on you that says, hey, we want to incentivize people saving for retirement. So once you put it in the IRA, it's going to be there, and it's supposed to grow with one of these hedge funds and all this kind of stuff. But if you pull it out, let's say you want to pull it out when you're 40,
right,
and you're not retired,
that's with me.
That's not what they want you to do.
No.
But they can't stop you from doing it, but they can
hinder you.
They can hinder you. They can whack you with this 30% fee.
Yeah,
37%. Yeah, 37%. There's all kind of stuff you're going to run into. So the point with an IRA is when you put it in there, it's not like putting into a bank savings account where you can just go get it whenever you want.
Right.
You put it in there, and if you ever want to take it out prior to when you retire, you're going to get hit with a whole bunch of fees, and it's not going to be worth it for you to do that.
Yeah, so this just came to my mind right now. So imagine this, you got some money, or let's say you have a plan to remodel your bathroom, right? You got the plan to remodel your bathroom, you want a really nice bathroom. Great. Now you can build that bathroom yourself and run into all of the particular hardships and all of that, or you can end up having a group of professionals, hedge fund managers, people who know money in and out. Their fingers is on the pulse of what happens in the financial world. Would you rather have a pool of professionals dealing with your money to make money? And here's the thing, the better that they make the money, the better it is for them as well. So they're not trying to destroy your money. They're not trying to fail at making you money. They want to succeed at making you money. So while your money for retirement is being dealt with and handled by professionals, right? Just like you want to have professionals to remodel your bathroom, you want to have professionals represent you in the court of law, right? You want professionals to handle your money here for retirement. So then when you do retire, this money has accelerated at a rate hopefully higher than the rate that you would have done on your own. Yeah?
Yes. The problem with the hedge fund model is it relies entirely on the stock market. And the stock market is extremely volatile and can go up and down all the time.
Yes.
Kind of like cryptocurrency, but an increasing number of financial professionals that you're mentioning are seeing that the stock, are seeing that the stock market is eventually going to be due for a big crash.
Yeah.
And if the stock market crashes, then so does the value of all that money that you have put into these hedge funds, no matter what the hedge fund managers do.
Yeah.
Because their job is to pick the stocks and to ride the wave of the stock market.
Yes.
So they can do that really well. But if the stock market as a whole goes down, the value of all that money that you put into the stocks is still going to go down. That's why you would want to diversify your investment out of the stock market and into crypto, into a crypto IRA.
Okay.
And what this allows you to do is you're still operating in this IRA environment or this IRA bubble. So your money never goes out, you never get hit with these fees, you never get any of that. But there's something called an IRA rollover.
IRA rollover.
Yes.
It's called it. Okay.
And a rollover allows you to take money from one of these hedge funds and move it into any of these other
Because
retirement.
that was my question. I wanted to know, why couldn't I do both? Like, why couldn't I kind of diversify, like you said?
Yes.
Why can't I do that? And then, like, can I do that with with my digital money?
You sure can.
Okay.
Because the My Digital Money, the IRA side, is within this IRA bubble. So all you have to do is go to your current hedge fund and say, hey, I want to withdraw X number, however much you want to diversify into crypto. X amount, roll over to this other one.
Okay. So when I roll over, does that include any kind of those penalties? Am I going to get hit with
No.
the 37%
No,
penalty?
because you're not taking it out of this box.
I'm just moving it.
You're just moving it around
Okay,
in the
so
retirement
right.
box.
So hey, don't hit me. Don't penalize me.
Exactly.
I didn't do anything wrong. I'm not
Yes.
taking my money out. I just want you to move it from here over to here. Can you roll it over to this situation over here?
100%.
That's still a Roth situation.
Yes.
I did a Roth rollover.
Yes.
Yes.
And then you can buy Ethereum, which is going to give you a lot better return than the stocks.
Okay,
Not
now-
financial advice. Buy Ethereum.
Wow. Okay, so when I do the rollover, I can tell my people to what to do with that money?
No.
Oh.
When you roll over, you get money in here, and then you can decide which cryptos you want to buy from there.
I
Because
can.
now, instead of them holding the money and making the decisions about what to buy and sell, you hold the money and you make the decisions about what to buy and sell, but it's still in this retirement box.
Wow. So hold on, let me get this right. If I'm over here with this, with my hedge fund folks, I can't tell them what to invest in.
Nope.
Okay. So when I roll it over, no penalty,
No penalty.
and I got my money over here, I can tell my folks who are representing this money what to buy?
You are representing this money.
Oh.
You can just go in here
Yeah.
to your portfolio
Yeah.
and you can buy, this is just a test, but you can buy all kind of stuff. Actually, it's not the right one.
So what I have technically done was empower myself as an investor.
Yes.
And I still let professionals do what they have to do, but I might have a hunch or a wig, and I
Exactly.
just made that word up, wig. This sounds like it fits. But
Yeah,
anyhow,
yeah.
I roll that over there, and then now I can kind of do this. But all the onus is on me. If I mess up,
Yes.
if I end up buying Dogecoin,
If you buy Dogcoin here, you are going to lose all your money.
yeah, okay.
So that's why we don't carry Dogcoin. See, and that's another thing we do. We don't carry these joke coins like Dogcoin. We only carry the legitimate ones.
But premium cryptocurrency.
Yes.
Okay.
We only carry the big name ones, and people they want to invest in some of the under the radar ones. We're going to expand into other under the radar ones too, but they're all going to be real. They're not going to be these
Right.
goofballs.
And just for you guys to know, some of the other shows we talked about what's real versus goofball and et cetera, et cetera. The bottom line is, and what my walk away and my understanding of it is this: when you invest in some of these under the table type of cryptocurrency, there is an infinite amount of processing. They can continue making it. Whereas Bitcoin says there's only going to be so many Bitcoins, which
Exactly.
stops the inflation. But
Yes.
these other ones, they can continue printing it, which means that it can go on for infinite. And that
Exactly.
means it doesn't have the stability
Exactly.
of it. It's basically like printing money over and over and over. That's what
Exactly.
creates inflation. So with the Dogecoin,
Exactly.
they continue printing it, and therefore, as Nick said in a few episodes ago, this is what's going to happen with it because they don't have a stop point of it. If you have an infinite amount of whatever it is, you value it differently than if you only had one or two. Right?
Exactly.
If you had 1,000 husbands, you probably would not value each one of those husbands. But if you only had one really good husband, you're probably going to treat and care for that hopefully that husband better. So I don't know why that became part of this conversation, but somebody out there, one person needed to hear that. I know there's one person now was about to Dogecoin their husband, and now you're going to hold on to it. So there's that. So, okay, that's good. All right, that's good. So that's a wrap on this. Is that a wrap? Is that complete? That's good.
Exactly.
All right, so hopefully you guys have a stronger understanding of what the Roth IRA, I do, and I've gone all this time not completely understanding it, and then how it turns into the hedge fund situation. You can roll it over, get some of this My Digital money right here, and you can become empowered in your own retirement.
Yes, because here you are making the decision.
Yes.
Love it. With the hedge funds, they are doing it. They are playing the stock market for you.
And let them do what they do because they're
Exactly.
professionals, but you can get involved as well.
You can get involved in this because crypto is where you control the money.
There it is. Thank you. Take care.